Last year, KKR sold garage door maker CHI to Nucor for $3 billion. Well, what's the big deal? It was a huge windfall for the private equity firm, but also to the employees, thanks to an ownership structure ginned up by Pete Stavros, KKR's co-head of global private equity. Our Leslie Picker has been following this story and is here with the latest and with the latest company, Leslie, that KKR is hoping to shake up.
Hey, Kelly, that's right. KKR announcing it plans to be the new owner of pump manufacturer Circor, but as part of the $1.6 billion take private, every Circor employee, including hourly factory workers, will also get a stake in the company. Broad-based employee ownership has been championed by KKR Stavros. Since 2011, KKR portfolio companies have awarded billions of dollars in total equity value to over 50,000 non-management employees. Stavros says the payoff is huge.
The program encompasses a lot more than just handing out stock. It's about giving people a voice in their work, teaching financial literacy, driving a really robust employee engagement effort. And it's all of those things taken together that deliver the kind of outcomes we've seen at the other 30 times that we've done this. When it's done well, all of those metrics go in the right direction, value is created, and everyone participates at the end.
They'll likely hold on to Circor for a while, but down the road, when they do ultimately exit, those employees will get cash in a sale or stock in an IPO. Depending on those returns, these payouts can be worth six figures. He says that's created more workforce loyalty, especially in a tight labor market.
You can see people less likely to quit their jobs, more engaged on the job. If you look at federal statistics on turnover, we're living in a world right now where almost 4 in 10 Americans quit their job every year. 70% of Americans, according to Gallup, are not engaged on the job. These statistics they're bad for workers because people are bouncing around from job to job and not advancing their skills. And it's bad for companies.
Of course, this program is incumbent upon the deal closing, which is expected in the fourth quarter of this year, subject to various approvals.
Henry McVeigh first told me about this, how KKR always tries to do this with equity ownership among employees at companies that they buy or that they're involved with. I wonder if it should be more widespread. Are there any downsides or trade-offs? I mean, do people have to take lower, kind of annual comp to make up for this?
They don't. It's a great question. And I just spoke with Stavros about that as well. It's an added benefit as part of the program. They don't have to take any wage cuts in order to make this happen. They're not taking on any additional risk as a result of that, because that was my concern, too, given kind of what we're seeing with regard to wage inflation. Is this a way that companies are trying to kind of work around that? No, the answer is it isn't. The pushback they do get from CEOs is just time management, the ability to kind of oversee this, manage all of this. It does take some time, especially the financial literacy component of it, the awarding of the stock, kind of how to divvy it all up. So he says that's the number one pushback they get.
Or do people just sell the shares? And, it's sort of like if you want to be incentivized to have the company perform well, you got to hang on to them. There might be people who, once they can, just say, I'd rather diversify because I don't want all of my corporate and, stock ownership eggs in the same basket.
Well, they're in a take private like this. They're locked up just alongside KKR's investors. So they will get liquidity here when KKR investors get liquidity. So they are, from that standpoint, incentivized to stay on until there is some sort of transaction down the road, which these funds, oftentimes are 10 years.
Yeah.
It can last a full decade. So
fascinating. Leslie, thanks for taking us inside. We appreciate it.